My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job, not just to entertain, but to educate, teach, context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. You want to know what's driving this market, with the Dow ultimately tumbling 282 points today, S&P dipping 0.53%, while the NASDAQ actually advanced 0.67%, led by the Cramer COVID stocks? Yeah, that's what this market was about today. Zoom Video, the work-at-home king, Zoom 7.6%, followed by Livongo Health up 6.9%, Ring Central up 6.3%, Datadog, Viva Systems 6.1%, Teladoc up 4.7%, Massimo up 4.6%, Twilio and Etsy up 4.5%, DocuSign, Salesforce, Slack, Microsoft, NVIDIA, CrowdStrike, Chegg, they're all surging. And you know what they have in common, don't you? These are the stay-at-home economy stocks, and they're back. Or maybe they just took a breather before they reignited. I'm proud that we've had all but one of these on the show. I'm trying to bring them all to you. Now, why? Why is this happening? Because today we started worrying again about the pandemic. Cases are spiking, and that defined the action, even as we got a very strong 1-2 punch of good news from the three J's, and that's Johnson, Johnson, and J, the three J's. Let's start with some good news. First, J&J announced that it's starting human trials for the COVID-19 vaccine 2 months ahead of schedule. In July, it's right around the corner. That is very positive. It is fabulous. And there is no reason for J&J to come on and talk about it unless they really had confidence. When they spoke to Meg Terrell, that told me it's the real deal, because J&J is one of the least hype-oriented companies in the world. Then right on its heels, we heard from the third J, Jay Powell, who promised to prevent another terrible quarter like the one that this country is having right now. By the way, it's the worst Q2 on record. And how's he going to do it? By any means necessary. As much as I love it when our Fed chief tells us that he'll do whatever it takes, I found myself wishing that Powell would just own up to what's really going on here. He'll do what he can to keep the balls in the air until the other J's, the brothers Johnson, can come up with a vaccine and put an end to this whole sorry period. Of course, it's not that simple. But we really do have to start recognizing what Powell's doing, which is the same thing that Treasury Secretary Mnuchin's doing, the same thing that Congress did when it passed the stimulus package. They're trying to plug enough holes in the dike to make sure we can get the upward slanted part of the V-shaped recovery growing. And they also know that it's not sustainable until the vaccine arrives. You can get this part going down, but to get this part, well, you need a vaccine, or else it goes. When you hear the head of the Federal Reserve say, and I quote, "We are not thinking about raising rates. We are not even thinking about raising rates," end quote. You know he's trying to do everything in his power to keep things from going off the rails and doesn't want to discourage anybody by saying that he's going to start raising. When you have this kind of epiphany, it puts a lot of things in perspective. Take Friday's surprisingly fabulous employment number. Now, look, remember, we were looking for 8 million lost jobs. Instead, we got 2 million new ones. Of course, we didn't really create those jobs as much as we clawed them back as states reopened. So now that the reopening has arrived, why can't we just go back to normal? In part, it's because cases are already starting to spike in states that opened early. No spike in deaths yet, but we know that deaths tend to lag cases by 2 to 3 weeks. Still, we have a better understanding of the virus than we did in March, when we really knew nothing. We have more resources. Everybody knows to wear a mask now. However, ending the lockdown just isn't enough. Sweden never had a lockdown in the first place. Their economy still tanked because people are afraid of getting sick. Lots of people who are at risk still needed to stay home. There are tons of otherwise productive people who are now relying on government stimulus to get them through until when? Until we have a vaccine. Powell and Mnuchin and Congress need to keep stimulating the economy. There is no choice. Let's be clear. As Jay Powell said today, quote, "There's no playbook here," end quote. That's because we really have no idea how closely people can gather without a vaccine or a cure. even after all the misery of the last few months, we just don't know enough about this darn thing. The science, it's a novel virus. And although we have a better understanding of how it works than we did earlier this year, we know it's not a respiratory illness, for heaven's sake. We're still very much in the dark of a lot of things. Do you need to stay 6 feet away from people outdoors? Is it 7 feet indoors? Is it 8? Can it be stopped by a mask? What kind of mask? An N95? Can it be an Etsy mask? Does the mask only stop transmission? Or does everybody need to wear one for you to be protected? If you wear a mask, you maintain that distance. Can you safely go out drinking? How do you drink with a mask? How do you go to games? Can you high five? Can you fist bump? Or, most deadly, use the bathroom at a sporting event? What will a mask do there? And how can you possibly be socially distant at halftime? The truth is, if COVID's making a comeback, if it's not safe to gather in large crowds, then millions of Americans just simply won't be able to get their jobs back because they rely on crowds. They'll be on the dole until we get back to normal or the dole runs out. And we can't get back to normal without a vaccine. Let me give you a couple of examples. We're now starting to see some numbers from the airlines, which need both vacationers and business travelers. Right now, we don't have much of either. Then there's the restaurants. Some of the big chains are putting up pretty good numbers to show they'll be able to stay in business. Stay in business is the operative term. They have cash flow. They have customers coming back. Sure, they can't serve anywhere near as many people as they used to, at least not inside. Some chairs and tables remain empty because of social distancing, but they have the money. They can make it. But the small, medium-sized outfits, are you kidding me? Give me a break. They'll go through that paycheck protection money like no tomorrow. They won't get the customers. They won't get the folks who drink a lot, the real money-making group of people, and they won't have crowds. I know restaurants, and I know bars. I own them. If you don't have crowds, you're not thinking about bringing on more staff. You're only thinking about whether you should lay off everybody and close before the rent crushes you. We see the same thing at the mall. When even the Gap can't pay the rent to the Simon Properties Group, who, by the way, ended that Taubman deal. Well, I mean, guess what? They get sued. But what do you think happens to the smaller companies that have far less access to capital? Sayonara. I know what the smaller retailers won't do. They won't wait for J. Powell to save them because they can't. Which brings me to today's market. When you look at what went up today, it was strictly the COVID stocks. The Cramer COVID index was up nearly 1.5% today, after outperforming significantly yesterday, too. And that's why the Dow and the S&P got hammered, but the Nasdaq went up big. These stocks are back in play. And it's why this market's all about the 3 J's, Johnson, Johnson, J. I love having Powell on board, believe me, but it's the other 2 J's we need to succeed in making a vaccine. Or maybe it could be Regeneron or Moderna or AstraZeneca or Pfizer. Anything, please. You can listen to every word Jay Powell is saying, that he'll do his part to get those 22 million people back to work. But this simply isn't a problem for the Fed. It's not a problem for Mnuchin. It's not a problem for Congress. It's a problem for pharma. Apple can't solve it. Amazon can't solve it. NVIDIA, maybe. They're doing some pretty good stuff. But the home builders can't solve it. No. It's these guys. Only the pharmaceutical companies can beat this pandemic. Until then, we can see some industrials or oils or banks or airlines rally on the hopes that Powell will do his part. But there's only so high they can go without a vaccine. And now that you can see that they're being repelled and repelled hard. Bottom line. No broad-based rally from this level is sustainable without a major scientific breakthrough in the fight against COVID-19. This is pretty much as high as we can get absent a vaccine. Until then, well, you're looking at it. Stick with the Cramer COVID index, especially on the days when we get way too optimistic about a recovery. Kevin in Illinois. Kevin.
Hey, Jim. Love your show. Been watching since the first day you went on the air.
Thank you.
2 things. I love politics and I love trading. I was 22 years Chicago Board of Trade veteran. Also worked on a successful presidential campaign. So I want to know your thoughts on Snapchat and social media stocks that take a stand against disinformation and what your thoughts are overall on civil unrest and the way to trade these stocks.
Well, you know, look, civil protest in the name of innate racism in this country is good, and I favor it. I don't know how to really conflate it with the stocks. I mean, I'm glad that, Snap obviously is doing well because they agree that there's no room for racism. There's no free speech for racism when it comes to that. To my view, it seems to be the view of Snap and Twitter. If Facebook really wants to see its stock go higher, maybe they should endorse the notion that there should be no free speech for racism. I think that would be a good change. Let's go to Kevin in Texas. Kevin.
Hey, Jim, I wanted to get your take on Kroger. Over the last few months, I've noticed more customers in the stores and much more traffic for their clickless curbside pickup. I think this traffic will show up in their quarterly earnings next week. What's your opinion?
I think they're going to have a good quarter, but my problem is they are up against a company called Costco. And Costco may be the best-run company on earth. So even though I think Kroger's good, I think they got good managers, I like their stores, I refuse to recommend a company that has to go up against the king, and the king is Costco. Let's go to Ali in California. Ali.
Sunny San Diego, booyah to you, Jimmy Chill.
Lucky man, booyah. The Chill man was under attack in Twitter, but that's okay. I got unlimited firepower, and I get up at 3. What time do they get up? I'll set the alarm for 2:45. What do you got? What do we got?
First, I want to say thank you. I was a caller on your show 9 years ago. And I took your advice on buying Apple after they announced the Verizon iPhone, and I just held on to it. So thank you, Jimmy Chill. You are the man.
Well, people want to trade Apple endlessly and lose money. I actually prefer making money. I think it's a better posture. How can I help?
Well, now for my question. With everyone working from home lately, athleisure has become the unofficial dress code of the pandemic. I sold at 210 in April, and I've regretted it daily. But with earnings tomorrow, is it a good time to rebuy, or should I wait for a dip in Lululemon?
You know what, Lulu, here's the way it works. It usually comes out. The headline, people, there's like this second where people think that it's not that good, or someone tries to tamp it down because they're short and make it look bad, and that's your chance to snap it up. Lulu is an amazing company. It is just an amazing company. What can I say? Really fabulous. All right. I want you right now to recognize that the Cramer COVID index is in play. Why? Because as much as the Fed does, Secretary of Treasury, President, Congress, it's a vaccine that is needed. Until we get a scientific breakthrough, we may not be able to go much higher in a lot of the recovery stocks. On Mad Money tonight, looking to book a trip in the cruise stocks or airline space? I'll tell you why an investment in the sectors could be put on pause. Then there's a bull market in the great outdoors, and I'm eyeing a play that's still cheap enough that it could be worth buying at these levels. I'm going to reveal the name. And as the economies begin to reopen, I'm sitting down with Marriott Vacations Worldwide to get a read on how it's operating in a COVID-19 world, struggling to open its doors at all its places, but they're doing pretty well. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.